Type 9.
Good morning, everybody. Welcome back to another live stream here with the Everyday Growth Advisors. Hope you're having a good morning or evening wherever you are. Just a quick little one here. We are gonna kind of give you an update since Monday. As I mentioned, since Monday that we would really have a tough time immediately bouncing, and that's what we kind of had 1 to 2 days of just sideways movement, followed by the confirmation of this demand level. Coming in and sweeping some liquidity. So perfect planning so far. Unfortunately, I haven't really been trading that much. In fact, took a loss on Tesla early this week, and I just kind of lost interest in the market for a day or two, and sometimes that's okay. Remember, your weeks are not always going to go perfectly, and neither should it. If something is going too well and you're constantly hitting everything out of the park, something might go wrong soon. And I've been having weeks back to back with constant profits, and I know that I have to be extra cautious. That's the reason why I'm kind of holding back adding any risk. But however, I did take some swing trades. On let me see, yesterday. Yeah, yesterday. I took it yesterday. There was a Apple call, I took some SPX calls, and I took some Nvidia calls. So these hopefully will play out this coming next few days, and those will be trades that we will be hoping to close out in profits as swings into the end of this week. Now, I did mention that we would need to snag some kind of a liquidity zone, and that zone would be between 3650 and 3800. That's exactly what happened yesterday. We came down into that perfect demand zone, and now we got a little bit, it's kind of a doji reversal, doji-E kind of reversal. Not exactly the most perfect reversal, I would say. And so therefore, you have to be a bit more cautious here heading into today. Now, from the macro standpoint, there were a couple of things that changed early on Monday. Not really it's not really equity related, but it's FX related, which was the big announcement from BOJ to kind of increase the ban rate of their bonds, their bond program. And so that kind of caused the dollar to dump a little bit because the Japanese yen was strengthened against the dollar. And if you guys know anything about Forex, then you know that there are 4 major currency pairs, and USD Japanese yen is not one of them, but it is one of the key currencies that are traded very effectively in FX markets. And so there was a lot of hedging against the Japanese yen going down further because the Japanese economy is not doing as well. This is just something that honestly I don't expect you guys to know. It's just something you got to keep track of globally sometimes. The Japanese economy is in a very unique situation because they have been going through a period of deflation for a very long time, and so a lot of the prices in their economy, in fact, they're in the reverse situation of what America is in. So instead of inflation, they've been going through deflation, and so this start of inflation back in the economy is giving the central bank some reason to start to increase rates once again, and kind of rein in the currency a little bit. So that caused Japanese yen to strengthen a little bit, which caused dollar to weaken. But that was a weird situation on Monday because the dollar weakened, and at the same time, we had U.S. equities falling. So it wasn't really a correlated move. In fact, it was uncorrelated. That's just, as I said, I don't expect you guys to be keeping track of such things. But remember, as a trader, you have to be hyper obsessive about understanding everything about anything. And so I'm just giving you guys the lowdown of what happened for your own benefit of knowing. You might want to read into the Japanese economy a little bit, see what you have to learn about that. It's actually a pretty interesting and unique situation in terms of economic policy, and yeah, it's definitely a unique one. So from that macro perspective, nothing has really changed except for, remember what I told you guys, the market's going to start pricing in that higher terminal rate. That's exactly what's been happening in this past 2 days. You guys have been seeing a lot of high beta stocks getting sold to the ground. Even Apple was not really let go from this basket. And in fact, Apple and Google and the majority of the big techs, they were also sold off quite aggressively in this past couple of days. One of the stocks that I covered for a very long time back when we were at the sub $200 was Tesla, which is now trading at $140, which I pointed out many weeks ago that they were buying $140 puts, and we are finally in the money there now. They were in the money yesterday, and they are in the money pre-market here. So, obviously it pays to attend the stream if you follow some of the things that we talk about here, and you just, action on them. There's a lot of money to be made. There's a lot of free game here, and I'm very proud of everybody that keeps, turning up, and all you have to do is literally just turn up and listen. It really doesn't cost you anything, and I try to take the time to provide as much value as possible in free game so that you guys can be prepared for your day and do a lot of the research and distilling for you, so that you don't have to do it yourself. So cheers to teamwork and cheers to having a community of like-minded people. I appreciate you guys taking your time out to be here and smashing the like button and whatnot. Okay, from a technical perspective, really simple moves today that we have to look for. And that's pretty much the 3861 magnet. Now, there was also another report posted by Nomura McElligott, which is this report right here. And essentially, if you want to just hear the TLDR, there's basically a couple of JP Morgan hedged equity funds, or maybe just one fund that owns some protection, that had owned some protective puts. So they had a massive put spread collar, which was basically they bought some puts, and then they also sold some calls above them, and then they also have bullish calls. So it's kind of a net bullish position, pretty much. But I think what they did was, so let's see here, owns protection, so $15 billion worth of it, by the way. Funded with the sale of bullish calls. So they bought puts, but then they sold calls again against the puts to make it cheaper. And then even more bearish puts. So basically, they sold some more bearish puts, sold some calls above, and then they are holding these puts here. And this just happened to be the 35 strike, and there's $15 billion worth of this cumulatively. And that's something that everybody's watching because, it's very likely that they will try to keep the S&P 500 price above 38.35 heading into this expiry. And I think that expiry is pretty much the end of this quarter, which means it's going to be into the next week or so. So we're expecting them to keep the indices pegged to around that level. So that's just a one, small little thing that you guys should keep in the back of your head. Where'd it go? Yeah, so there's as things the market makers would need to purchase shares when the S&P 500 falls and dump stocks when the index rise, acting as a force to pull a market towards a strike price. This is yet another volatility killer, and that's hence the name of this live stream today, Volatility Creators. You can see the effects of that, mainly VIX kind of crushing down here this AM. So yeah, as Charlie McElligott, he writes in his note, and I have the full report. I have posted it on our Discord. He says that we'd probably find ourselves gravitating to the very specific S&P 500 futures 38.35 level in the final week or so of the year, which means that obviously it's not going to be a Santa rally, but will be above 38.35. And so that means that obviously this morning we're already above that level. That means that we will have to hold above that level for the next 1 to 2 weeks. So what I would be expecting is for us to kind of come back up here and start chopping around in possibly a zone somewhere up here. If we're just going along with that, then that's what should be our inference. But remember, don't make that your bias. Just have that at the back of your head, but remember, trade around it. Okay. So technical perspective, as I mentioned today, having all of that at the back of our head. What we should be looking for and what we should be focusing on is this 38.61 level. Okay, the 38.61 level is a very strong level, which we need to get above. If we can get above 38.61, then 3900 is very, very likely to be retested, because 3900 was a very strong demand zone that came in prior, or it was a very strong point right here that we had a lot of demand come in twice, and then we broke through it finally after testing it multiple times. So this 38.61 or 38.60, let's just call it 38.60 for making it easier, is going to be the key level. And obviously this projection that I've drawn, as I mentioned on Monday's live stream, there's a very high chance that we would come down further, find liquidity, and then rally, which is exactly what you're seeing now, right? But we might get a little bit of choppiness before we get there. So, you might see smaller waves of pullback, run up, that kind of thing, right? And remember that the market's not guaranteed to move all the way back up to 3,900, for sure. We are just forecasting, but remember that you have to be ready to cut your positions whenever you see that things are not going your way. So that's my forecast for right now. Probably heading into the end of the week, we're going to chop around a little bit, try to break out of 38.60. If we break out of 38.60, we might end the week at around 39. That means 2 more days of trading. I don't know if we'll actually get there. Let's see how if we can get enough volume and momentum getting into there. And then once we get up to 39.05, that's going to be a defined level, because we'll see if we can break above that. That will send us up to 39.50 to retest. And if we start rejecting either at these 2 levels, then that's going to send us back down into another crashing wave. That is also your sign and your time and opportunity to short the market once again. Okay. Remember that the forecasts of the equities in Q1 are not exactly favorable. So a lot of this pullback here is going to be another opportunity for people who missed out on this wave down, including me, for us to get a confirmed theory that we're going to see rejections in this area for us to short into the next leg down. Okay, so that will be something that we'll be watching very closely, and I'll be reporting about it on Friday as well, and then into next week. If you look at our newsletter from this week, I also covered a lot of what to expect in 2023. Also, I will be doing a 2023 report, which will be available on our website sometime in the first week of January. Okay. Now, I received a lot of DMs from you guys requesting the Excel sheet. So let me make it really simple for you guys. I'm going to clean up the Excel sheet. I've added some other things here that I want to add to it, like for example the different types of setups that you can possibly look for, and there I'll make this into a drop-down list so it's easier for you. I'm also going to make these formulas all done for you, This will be your log, which we'll copy everything into for the weeks going forward, and then you'll have a small account tracker and also the monthly small account tracker. Your small account tracker will also come with a calculator now, where you can calculate your stop loss. So if you put the contract price into the blue boxes, that will give you the acceptable risk, that will give you the cost basis. You can adjust all of these things, and I'll make this available through our website, but let me clean it up first and make it look good so that you don't have to pay. I don't know, there are some softwares out there that are charging like money per month to journal, which I find quite ridiculous. It doesn't really provide you any additional insight. It's not like it's a machine learning algorithm or something, which, by the way, if given enough time, I can do that on the Excel sheet as well. It's just a matter of using validation techniques and then programming the sheet with R to come up with what is the best setups that you trade and this and that. And we can do all that in the future. I'll get my developer to work on something, but I don't think I'll get time to do that, not until after EGA version 3.0 launch, which, by the way, I have news about that. It's going to happen on January 31st. Okay, so January 31st, you guys, I really cannot wait for this. And I've been working a really long time on this. We're going to be doing a huge launch on January 31st. That means the end of January. It's going to be introducing the complete brand new course, revamped. You will no longer need to wonder what is the best trading course to take, or anything related to investing, day trading, options. It's all going to be one entire thing, and you're going to be really, really pleased when you see the curriculum of that course. I have put in a lot of effort into it, literally to the point where I have gone through my finance textbooks and distilled all the information, put it out all in there. If you guys want to see a little bit of a sneak preview, I could also do that. Maybe in the next live stream. Maybe in the next live stream, I'll show you guys a sneak preview of what the course looks like. And so yeah, that's a little bit of announcements that I wanted to kind of give you guys. Also, on top of that, we're releasing a whole bunch of updates to our Discord platform. People who are in the Wolves and Lions, you will also be able to benefit from some of the new releases, things that we'll be rolling out in terms of our members. So yeah, it's going to be exciting 2023, and I'm really, really happy and glad that you guys are part of the journey with EGA. So I want to thank all of you guys for being a part of it. Okay, apart from that, then we have NASDAQ here. NASDAQ came down to the $11,000 level, which I spoke about in the previous live stream, right? We came pretty close to it, right? And then we bounced. And so we want to also see NASDAQ come back to retest 11,200 and break this for the retest of 11,450 before that next downside. So on NASDAQ, the situation is going to look something like this, where maybe we have a wave up and then a wave down and a wave up and then a wave down, a wave up, and then here probably cap out. This will be another opportunity to short and then further down into these lows back here to retest the November and October lows. So for those of you that have not been able to get in on this short, when we start to go long here, you might want to start nibbling some short positions, of course based on your risk tolerance and risk to reward ratios. IWM also bounced a little bit this morning. Same situation here. We didn't quite get to the 23.6 extension. Remember, as I have mentioned to you guys many times before, you do not always have to perfectly get there. It's never a guarantee, okay? And gold, this was, so remember how I was bearish on gold, and then the whole BOJ thing came out on Monday and kind of spoiled the whole plans, because when dollar started to go down, that meant that gold started to rally. And so this entire Bank of Japan fiasco that just happened, it put a kink in my plans with the dollar strengthening. But you know what? I have time on that gold trade, so I'm going to hold it for a little bit. And if we break out of the 170 level, then I'll cut the trade. If not, I'll leave it open for the time being. As for bonds, we've retraced back to the 38.2, and I think this is where I want to start adding another tranche for those June expiries, the ones that I have. The 160 calls that I have. Sorry, the 120 calls that I have. And so I might add another small position to this to bring the average down a little bit. And I think that bonds will be a more overcrowded trade in Q1 than equities will be. So I want to take some exposure in bonds but maybe not so much as well. I'll look at it again and let you guys know what I have decided. Apart from that, semis broke through this key level here. I spoke about that in Monday's live stream. If we break below, I want to see that retest of 212. So don't enter this semi short now. This is one of the reasons why I haven't taken anything short semis. In fact, I went long on the semis. I have NVIDIA long call, betting on this upside here, hopefully. And we'll see if NVIDIA actually decides to push up and break above this 165 level in the next 1 to 2 trading days or into next week. I have some calls on this. And let's see if we can get a nice retracement back here on semis. If it aligns with NASDAQ, that will be nice. And then that retrace at 212 will possibly give us a downside move on semis once again in the interim. But long term, I want to obviously be bullish on semis. Energy, as I mentioned, risk to reward ratio to the downside was slim, right? And we continue to see this as a bullish opportunity in the longer term. But the short term opportunity is looking like very slim risk to reward ratio to the downside. As I mentioned in the previous live stream, this level here, which we exactly came down to, would act as a support, which exactly it did, and we got to bounce off it. So now if we actually clear about this $87.50 level on XLE, I might be more inclined to take an upside move here because the risk to reward ratio would favor the upside more than the downside here, and play that energy long, maybe as it starts to range in this little area. So I'll be looking at energy as a potential opportunity. Tesla, after being sold off so much, is bound to find some kind of a pullback after 8% loss yesterday. Pre-market it's up a little bit, but once again, don't pin your hopes too much on Tesla. I would say focus on other things, and if you can scalp it to the upside, then do that. So yeah, okay, any comments, any things you guys want me to break down, go ahead, put it in the comments right now. Also, who is excited for EGA version 3.0? Is anybody excited? Is anybody as excited as I am? Also looking at Amazon, by the way, for a potential upside play here. That's another one that I'm looking at. Hopefully we will get that one going in the next 1 to 2 sessions. We'll see. Pfizer, Starbucks was the other one I was looking at, and Netflix as well. Netflix still, it gave us that rejection and it started to pull down, and now it's starting to look like it wants to reverse. Okay, no questions today, no comments, no nothing. Oof, tough crowd today. Good morning, guys. Anil, Kyle, Chirui, Tracy, you guys doing okay? Are there seriously no questions for me this morning? Good morning, Max. What's up? DeMario, Coinbase. Okay, let's have a look. This thing's been sold off like nuts, right? Yeah, it's been sold off like crazy. Oh boy. Oh, this looks nasty. Let's see here. Okay, so Coinbase here looks pretty nasty. I mean, let's have a look at, first of all, where this long-term volume sets up to be on the weekly. Yeah, we're in uncharted territories here. Okay, let's get into the 4-hour, and we'll use the most recent wave to have a look at where the, okay, was this a 50% retrace here? It was not a 50% retrace, so this wave is still active actually. This wave is still active. That means we have to use this wave right here. This is probably a 50% retrace. Also not a 50% retrace. God damn. Wow. Okay, this one definitely was. Oof. Oh man, this looks nasty. Just from a fib perspective, it looks like this thing could really go down a little more. So let's have a look here. So these two pullbacks, well, this pullback here, first of all, this one was not 50%, and neither was this one from this entire wave. So if this point to this point doesn't have a 50% pullback, then that wave is still in session. That means this wave all the way down to this wave is the only wave that we can use because it was a 50% retracement. In other words, that this wave is still a crashing wave all the way down here. Now going off that, based on where we're just broken, we just broke the 23.6 extension. That means 2840 is up next, down from here. And then below that is the 1335 level at the 61.8 extension based on price symmetry and the Fibonacci extension and retracement. So just based on the mathematics here of ratios and the price symmetry, that is the two levels that we will be targeting for the downside. But I think what you should be waiting for is this pullback on Coinbase to retest the, what is this level here, $41 level or $40.68 level. Basically, this was the previous demand, right, that came in a couple of times in this zone, $41 or so. And once we get that pullback here, then that might, if you see a rejection here, that will be the nice opportunity to short this. Also, guys, if you're asking me, if you're going to tell me a specific ticker to look at, please give me your bias, like how the next person did. Like he said UNG to the upside. Okay, so then I know his bias is upside. I can validate the bias. If you just tell me Coinbase, I don't know whether you are looking for an upside play or a downside play. So it'd be good if you can give me a little bit of idea of what you want me to cover. Like, I don't want to do both scenarios because we'll run out of time. Okay, let's see here. UNG to the upside. Okay, let me just read some of these comments. Stoked, haven't gone through all of EGA classes yet, but looking forward to the 3.0 version. That's awesome, Eddie. When buying options, is open interest more important than volume? Not really. It depends on what your expected outcome is. If you are looking for a swing trade, and you are looking for a longer position trade, then both are equally important. If you're looking for just a scalp, then personally I would think volume is a little more important than open interest. But above 500 open interest is the minimum you should be looking at, because you don't want to be taking contracts that you get stuck with taking. Remember that contracts that you're buying has been underwritten by someone, and that means that there's an option seller behind that contract. And if you take a illiquid options chain where open interest is very low, let's say i.e. below 20, then you're going to have a tough time getting a fill on those contracts. So by rule of thumb, you should be looking at least more than 500 in open interest, a minimum, okay? This is a minimum requirement. It should be more, okay? And more than 500 in volume. That should be at least the minimums that you look at. It would be really good if open interest is more, and you'll usually see open interest clump up at the very important expiries and strikes. The key levels of support and resistance, or the demand and supply zones, will always have a higher open interest level. What else was I gonna say? Yeah. Yes. Oh, yes. Another thing. Open interest is good when it's high, but when it's too high, it's not good. So when you see something that has, like, for example, 60,000 open interest, you should stay away from this specific contract. Like, for example, I'm just giving an example, right? If a specific strike of Apple has 60,000 open interest, this is going to be more prone for a squeeze, or it's going to be more prone for being faded, okay? Because remember, the 60,000 has underwriters behind it. So underwriters are the ones that hold the true power of the option, not you as a buyer. When you're buying the option, you're only flipping the premium. Okay, I hope that gave you an apt explanation. Okay, let me do UNG real quick. UNG to the upside. Okay, so this one is... Okay, I actually do like the macro play on this because it's natural gas. But from the technical perspective, this looks like it needs to hit, or it needs to bounce. Well, it did kind of bounce, actually. Let's see here. I mean, I guess you could see a bounce. My way of playing this would be to wait above at least $18, at least $18.50. before you go long on this. At least 1850. You need to wait for the bounce right like above here, to be honest. Like get up here somewhere. Then you can go long on this. And it needs to be a strong bounce too from here, because this has like this just looks like it wants to go further, and it could bounce and then reject and then fall further. So you need a higher level of conviction here, which means you need at least 1850 or higher. If you really want to be safe, play above $20. Above $20 bounce, that will be a nice upside play. It could come back up here and reject. So you really want above 20 bucks, bounce like somewhere in this region, right? And then you can take the upside if you get a confirmation of the bounce. That would be my way of playing natural gas fun, like this. Just from the technical perspective, of course. Any thoughts on Okta? Obvious growth tech is not great all around. Considering long-term DCA position, where to start? Okta downside. Okay, so they do package software. Okay. Yeah, so this is gonna be one in the same basket as your high beta tech, pretty much. So this looks like it's gonna be in a consolidation for a little bit. I don't think playing the downside here is smart though. I think downside here is a bit slim, and I think that what you should instead wait for is that consolidation sideways, and then once you start breaking out here, making some higher highs, you can start to play the upside here instead of playing the downside. The downside looks pretty slim. I mean, it looks like it already pretty much achieved what it wanted to do. If you are wanting to play this all the way back down to like the IPO price, which is here, like back to $20 or so, then that, I mean, it might be possible, but I personally think you should wait this one out. I think the move is already over, so the risk to reward ratio is pretty terrible. That's just my opinion. Like, I wouldn't touch this one. What's the market cap too? 10 billion. Okay, not too bad. That's actually not bad at all. I think there's better upside on this than downside, personally. Okay. Thanks, no problem. Great insight and high OI. No problem, Rich. And Oman Kev. All right, cool. Okie dokie. Well, I hope that was helpful. It's 10:30. Market just opened. Max, no problem at all. I'll see you guys back on Friday. And keep the questions coming. I love these questions. Always ask as many questions as you can. Everybody learns. That's the best way. I like, even in classroom, in our classroom, that's the way I like it to be. Don't be shy of asking questions, even if it's a simple question. I'll always answer. There are no stupid questions. Always remember that. So keep them coming. And I'm gonna jump on the Discord trade live with the team right now. We'll catch you guys on the next live stream pre-market on Friday. Take care till then. Keep your risk light and see ya. Bye.